what Claude Code Team of Agents does is it puts this effectively a management layer and a communication layer amongst the agents. So all those things that you were doing sequentially before can happen effectively in parallel. And so that is, I think, a massive game changer.
Welcome to the Fund AI Pod. Today, we're going to talk about the world of FX. And with me is the CEO of Lumint. Alex, welcome to the pod.
Thanks. Good to be here.
Now, Alex, why don't we start off with you telling us about yourself and your role, and then following on with what Lumint does and who they service and what services they provide.
Yeah, sure. So, my name is Alex Dunegan, right? I am CEO and CTO. It's a small company, so we wear a lot of hats at Lumint. We started Lumint about 10 years ago when we got serious. And what we do is we provide currency management software and services. So, what does that mean? That means for all the institutional foreign exchange needs that asset managers, asset owners have in terms of managing their hedging programs, managing their currency transactions, all these things that require operational workflow and largely aren't part of the investment management decision. We provide the software to do that. And as we'll talk about today, right, a lot of that software is highly automated, and we make a significant use of AI to help us do that.
Now, I'd like to take a few steps back. And FX used to be all about relationships and phone calls. And I assume you've been in the FX world for a while. So could you maybe give us a flavor of where FX has come from to where it's at now today, and how FX effectively executes trades and, the workflow looks like?
Yeah, absolutely. So I've been I was doing the math this morning ahead of this discussion. I've been in the currency management world for about 22 years, which time flies when you're having fun, right? And so I've always been on the buy side, so I can't really speak to the sell side aspect. I mean, I know a little bit about it, right? Of course, but when I started out, I came out of grad school looking for an internship or job that I could combine my finance degree and my computer science degree with. And I remember getting the interview at State Street Associates and hearing they run somewhere between 4 and 5 billion in currency overlay, and think this is going to be the most sophisticated system I've ever seen, right? And I got there with still all spreadsheets and MS Access and manual workflows, and that's very common throughout finance, right? Not least of which at bigger institutions. And in that space, we felt pretty sophisticated in terms of how much automation we were doing with macros or with local desktop applications in terms of coming up with how do we come up with a trade, how do we manage the data that custodians or clients are sending us. But it was still all very manual or hands-on, at least. And so that went all the way from the data management side, pushing spreadsheets around, right, all the way to execution. Right? And that was phone calls to do deals, or we felt pretty automated using FX Connect and those kind of multi-broker platforms that we could at least put a file into and get a file out of without having to manually key in deals. But that's a lot of the FX market. I mean, I think it's still today some of those elements still remain, particularly in the forward space where we operate, where we're doing currency hedges. Spot transaction activity, right, has come a long way in terms of electronic trading and automated trading. But there's still a big component of the forward market that is that relationship based, is at least a much more involved relationship you have with your counterparts, because it's credit risk and it's a credit relationship at the end of the day. And then as such, it's harder to automate some of that, and certainly harder to automate a lot of the workflows around it. Now, I would like to say that it's pretty different right now in terms of the data input too. What comes from a transfer agent, what comes from a fund accountant, and what comes from a custodian. But it's not always the case. I mean, I remember, I'll say 2006, 2007, right? Subscriptions might come in that would go to the wrong account and we'd be notified by the transfer agent because someone was still filling out, an ISIN by hand on a fax order form for putting an order into a mutual fund. Right? I think there's still, at least from the chaos we see in some of the data, there's still some of those workflows that are in place today.
So let's go back to the creation of Lumint. What was the gap in the currency management market that made you look to launch this firm?
Yeah, so I helped to build and run the currency management business at State Street Global Markets, and we had a great number of clients and partners. but they always tended to be larger sized. So I would get calls every week from maybe a big institution that was just getting into the needs of a currency management program, or a small institution that was just getting started. And they'd call us and say, "Oh, this service sounds great. This is exactly what we need, and we're going to seed this account with 10,000 euros." So I'm glad you like what we talked about, but the minimum fee is X times that, right? And made those kind of solutions really inaccessible. And so that left, I think, a large swath of the market having to do these things on their own. And most of these places, and I'm sure we'll talk about this in more detail, if you're an asset manager, asset owner, there are much higher things on your priority list than currency management. It needs to be done, right? It's one of those things where it starts at 100% and you kind of only go down, right? It's not a profit center for most places. And so it's a cost and an operational headache a lot of the time. And so I thought, well, maybe if we can start our own company and do that in a way that we will to treat it with modern technical stack, modern technical approach, invest in the technology on a continuous basis, then we can actually service the whole market and make it much more accessible to small funds and large funds by giving that automation and scale. And so, when we started out, actually just being an independent currency management provider. But as you know, right, you need assets to get assets, and so that's a slow climb. But it helped us really grow the first version of the software and make it scalable and allow us to apply all the lessons we learned, in our prior roles. And then our big institution, is our deepest partnership today, is signed us as a SaaS vendor in 2018, and so that really kickstarted our approach to turn into a SaaS company, make it a much more of an external software offering, which I thought wouldn't really be popular at that point. I thought, hey, if you're a big institution, you're a big currency manager, you probably already have your own system. You're probably not going to look to hop to license one, but we found it to be the opposite. And so now we provide really just a whole modular set of any of the components that might help someone run their currency management program, whether it's full, software as a service on one side, or full white label on the other.
And for those maybe not as familiar, when you say currency management, what does that actually involve?
Yeah, it's a good question. There's we are a niche of finance, and then a niche within that niche. And so when I say currency management, I'm talking about passive currency management. This is not currency management where we're trading to generate alpha for an account. And so what this means is that an institution, whether it's an asset manager or an asset owner, like a pension plan or superannuation fund, and wants to manage the currency risk in their portfolio, likely will have some strategy. And this could be very simple when we're talking about a usage mutual fund or a share class or an ETF. Where they have a very strict currency management policy, hedge 100%, essentially, one currency. Refer to that as investor level hedging. So this is things like, I run a U.S. equity portfolio, and I want to distribute my portfolio in Europe and Australia and Japan. I'm going to offer share classes in those currencies to the local investors in those domiciles. But that generates currency risk, right, between that U.S. investment and that underlying investor's currency. And so we can step in and do that kind of hedging for them. That's, again, rules-based, largely operational, economically pretty simple, right? When we're talking about investment strategies or returns or complexity, you're talking about hedging one currency exposure. And so financially and economically, not that complicated. Operationally, very, very complicated, right? Yeah, everything runs on a schedule that aligns with the how a fund or a plan will price their accounts, reporting day in, day out. These kind of operational rigors that come up are really where someone like us that has the software to do it and the operations do it really can shine. So that's what we're talking about. We're talking about passive currency overlay to manage risk in a very fixed, rules-based manner. Whether, again, it's for an investor like that we talked about in the share class, or the other end of the spectrum, you can look at large asset owner, a large international portfolio where they want to have some level of control with the currency risk. Whatever their objective may be, whether it's diversification or risk management, or they may have some other dynamic at play.
And when it comes to currency management, timelines are often quite tight, from investor subscription redemptions, NAVs, to executing the FX trade. So how does your workflow automate that process?
Yeah, this is really one of the, I think, the most critical parts of the process. like you're talking about, because time is tight, not only from an operational perspective, but also time is risk. And so we spent a lot of time on that, making that very fast and as responsive as we can be. And so the way we think about it is that we have this potentially wide array of any kind of information that might come in. A typical one might be from the typical data providers in the institutional space, right? Custody banks, fund administrators, and transfer agents. And then there's also the downstream stuff where that needs to go, like you said, on that tight timeline. And we've kind of thought about this in a couple of different ways. One is that, unlike maybe some other providers in the marketplace, we don't enforce a one-size-fits-all solution. We want to slot into whatever the existing workflow is. That reduces the friction in terms of how do we integrate with other data providers, how do we integrate with downstream systems, things like this. So we made that really, really flexible. And we can talk about a little bit, how AI has helped us do that. But then also everything needs to be event-based, right? So back in the day, right, I'd catch a spreadsheet in an email, I have to push that into a system, or I have to email it somewhere else, or I have to save it and manipulate it and then send it somewhere else. All those things add time, and that increases the risk and reduces the outcomes for the client. And so we've made our platform entirely cloud-based so that it can handle everything on an event-driven basis, right? Everything comes in, so we can go from data receipt, whatever that may be, right? That could theoretically actually be the facts we were talking about before still. But then we can go from that data arrival to, trades generated and ready to execute as needed, and usually about a minute.
Okay, so you mentioned AI there. Let's get into that. Where did your journey with AI begin, and what did that look like?
So we really jumped headlong into this, into all the tools that are available. And I think just at the outset here, I think the things that are really important to us, right? One, we're a small company, so we need to be able to do as much as we can with as little resources as we can. And then also, it's such an exciting time from a tech person like mine's perspective, because the capabilities of all this technology is being released, and how the providers and there's new providers popping up all the time, right, are leapfrogging each other in terms of capabilities. So we're trying to stay very, very light on our feet in terms of adapting and using the whatever technology might best now suit our workflows. And so we started using, and I'll put this on the AI continuum here, we started using some machine learning models in our software back in 2020. So one of the things that originally that we wanted to do on that data management piece, again, this is just a critical part of the workflow that's really quite difficult, I think, for a lot of people to do, whether they're doing a spreadsheet or in maybe a more traditional system, is using machine learning for, doing it for anomaly detection, right? And being in dynamic anomaly detection, way different than your typical, standard deviation or other kind of typical econometrics type of approach. And so we started looking at that, and I think and I mention that because that was a new thing for us. We had not done any machine learning before, but it really started to shape how we think about how do we manage data, how do we capture data, and start to think about things more like a data scientist. And how do we make things accessible, the information we want, right? How do we make that accessible to the machine learning model so we can make the most of it, right? And I think that's really relevant, because if you fast forward to today, when someone at a company can have incredibly powerful AI tools on their desktop or on their phone, you still have to wrap your head around starting to think about things like a data scientist. How can you make that information available to AI? How can you, get the most out of that capability by thinking about problems differently? So we started there. As soon as GitHub Copilot came out, we were right on top of that. That was great. The hyper autocomplete that it could do, back in whatever that was, 2022 or something, was really fantastic for us. And we've just continued to, adapt as that has happened. So we think about it, and maybe just taking one step back here, we think about it on this kind of continuum of AI capabilities. And so on the one hand, and I think it's important for any company that's looking at this stuff, and I'll say particularly in finance, I think it's really important. You kind of have these degrees of autonomy, I would say, in terms and capability in terms of where you want to use these models, or AI tools, and where they fit in terms of a human doing their work, right? And so on the one hand, I think you have these nice little assistants. They help you boost your productivity as an individual, right? This is the deep research, or just summarize a document for me, or help me draft this email, or make a picture or whatever it may be, right? These things help me do a single task or a couple tasks faster. And then if you move up a little bit, right, you start to get to more interesting stuff where you have an agent do something. So note taking on a Zoom call is light agent work, right? Longer running deep research things or tasks like that, agent work. Things like Claude Co-work, right? That's out now, or even Open Claw, and some of these things that if you sandbox it appropriately, right? It's doing a little bit of work for a little bit of time, and those are really really powerful tools too. And so I think we're that. What part of business that hit first was software developers, right? So we living and breathing software development for is the core part of our business in terms of where we spend our money and our time and our focus. And we've used all these tools, and you can see it all of a sudden how those tools got better and better, right? Cursor was really good. We tried Windsurf for a while, Claude Code. Now, even just last week, right? Claude Code team of agents. And so all these things, moving in more and more capabilities, giving us more and more productivity, but also, giving the AI tools a lot more autonomy. It's helped us really scale and start to think about how we scale, I guess, in breadth and speed, right? So what kind of experiments do we want to run? What kind of products do we want to launch? Does the timeline change for that? And how does that go? And then lastly, you can get up to full kind of autonomous agents. And so we have a number of agents running in our application now. They're very focused, right? You can think about these things in terms of autonomy, but also, I guess, capability, right? And so we've kind of tried to work along that entire spectrum in terms of making Lumint team members more productive, work faster, make the business work faster in terms of product development and software development, and just sales growth, all those kind of aspects. And then also, how do we make that even more productive and improve outcomes using AI tools for our investors? So we try to work along that whole spectrum of where we integrate with AI and how we make use of those things.
Yeah, and I like to sort of bucket there in 3 categories. You're a software company, so there's the coding copilots, which I want to dive a little bit more into. Then there's internal workflows, and then internal agents or AI, and then there's external AI that you expose to your clients so they can maybe engage in an agent. On the software side, because as you mentioned, that's by far the earliest and also probably some of the highest returns in terms of productivity and output. You mentioned GitHub Copilot, all the obvious Copilot tools such as Claude Code, Cursor. What are you using today? And is that split up as in you use one particular vendor for your core software development, you use another for prototyping, for product development, but not actually using it in the final coding development of that feature? Walk us through what today looks like, whilst I obviously acknowledge that it changes so fast you may be switching tools 2 months from now.
Yeah, or next week, right? I mean, this is the kind of the pace of this stuff. So right now, I think right now we're predominantly using Claude Code. If you'd asked me 2 weeks ago, it would have been Cursor, and then before that again, something different. We tend to use some things though to try and get the best of what they're good at. So, for example, I will if I'm doing prototyping and brainstorming for some machine learning code or something like that, I'll probably use Gemini for that. My experience has been much better for those kind of complicated, more data sciencey tasks. In terms of our daily workflow, it's predominantly Claude Code. We do use Cursor because sometimes it just makes sense to switch between some of the models, and Cursor makes it really easy to do that. In terms of today, though, the biggest boost we're seeing, right, and it's kind of this exponential process of boost upon boost, right, but is one is putting Claude Code into our GitHub workflow. So in terms of performing software development, right, particularly in a financial application, it's so critical to have very rigorous code review process, right? One that makes sure that you're adhering to normal code standards and you have those defined even, but also one that can be done at scale, right? And so the Claude Code review process for our pull requests has been incredible since the reviewer went version 1 there. And so it catches most of that stuff. So when we have a small team, of 4 developers, right, and 1 QA lead, that has an immeasurable impact for us, because someone's not spending months trying to review this complicated code while getting distracted with other things. I mean, those moments are fading in the background for us in a lot of ways, and it's making us a lot faster. So that's been really, really critical to complete the workflow. You can go into any of these tools and you can whip something up that's kind of fun or a good prototype, but especially in finance where the risks of a mistake are so high, it's so critical to be able to have that complete, highly productive workflow. And so that's been a big part of it. And then also we've kind of been blown away by the Claude Code team of agents. So one of the things that, most software developers would have done that have worked with AI tools is you might do some planning, and maybe you have it run through part of the plan after you've done some planning. And then maybe you take that response and you write some code, and you have the AI then write some tests, and then maybe do another review, and you kind of loop through that process, right? But it's kind of a linear process. And so that can take time, right? And that takes more handholding. It takes maybe some moving around by the user of nudging those things through. And so what Claude Code team of agents does is it puts this effectively a management layer and a communication layer amongst the agents. So all those things that you were doing sequentially before can happen effectively in parallel. And so that is, I think, a massive game changer. Think about refactoring a code base, for example. You're some big bank that runs COBOL mainframes. AI tools would have helped you a year ago. Now, it's kind of crazy how much faster that might be. So that's what our setup really looks like from a day-to-day software development perspective.
If you're enjoying the Fund AI pod, the best way to support the show is simple: hit subscribe. It really helps a new channel like this grow, and it allows us to attract even more interesting guests from across the funds industry. Head to www.thefundaipod.com to catch past episodes, nominate future guests, or explore ways that we can work together, whether that's consulting, sponsorship, speaking, or collaboration. Now back to the episode. Okay, so double-clicking into the benefits of those coding copilots, are you able to quantify what the extra output is from that? And by that, I mean, compared to 2022 before they existed, are your developers now outputting 30% more, 50%, 2x, 10x? What does that actually look like in quantifiable numbers?
Yeah, so it's a little bit tough some of these things are tough to quantify for sure. Lines of code and these kind of things are kind of imperfect measures. But our rough guesstimate here is something like 3 to 4x. And that's in terms of just normal, closing issues and pull request merge type of statistics. I think there's a lot of intangibles from that though that are harder to quantify, but make the whole firm move faster. And so if you're closing things more quickly, right, and you're getting things done more quickly, and you're doing those things on average better because we have better automated code review and these kind of things, those are dividends that compound over time to make us faster and faster and better and better. So if you'd asked me 3 or 4 years ago, how many software developers are you going to have at the start of 2026? I thought, this is what we're going to put all our resources into. We'll have, somewhere like 16 or 15 developers, right? And we've not, right? We have 4. And I don't see that pace slowing down, right? That is going to get easier and easier to scale out with fewer and fewer people. It leads me to interesting, I think, interesting thing we've observed using these tools. So everybody has things on their to-do list they never get to, right? It's never a high enough priority. It would be good in a vacuum, but that's not how the world works, right? And especially not in a small company. And so what we found though is that these AI tools allow us to address some of those things in a more systematic way. So there's this kind of baseline foundational level of the software that just keeps improving in a more incremental way than it would have in the past. And one of the tools we're using for some of those things is a open source version of 𝒓𝒄𝒂𝒂𝒂𝒂, which is the Google framework that they published a paper on. And this, I think, is incredibly powerful in a space like finance because it's more of a scientific approach. And finance is great for that, right? You know what the outcomes should be, right? 2 + 2 = 4, right? If my stock investment pick did well or not, I know about it. I know about it clearly and on a rigid timeline. And so it's easy to make experiments that you can verify the results on. And so we've used that to do some really interesting things, in our little world, right? It's a tool that can be used for biological research and nuclear fusion, all these other things. But for us, we might look at a part of our code that's runs slow forever, right? And it runs overnight and it doesn't really bother anybody, right? But it takes an hour and it should take 5 minutes. Nothing that we could ever prioritize to get done. It never bubbled up to that. Certainly not something we would ever hire someone additional to work on, right? It's just not that important. But we're able to put this tool in place that can run trial and error experiments for any kind of thing that you can measure the outcome on, and we can just put it on the model and let it run. A few hours, a day, 2 days, doesn't matter, right? It's all separate from us. But then we can get that result at the end that exactly what we wanted. The code ran faster, so we've applied that in ways that we would have never done in the past. That's save, make the code a lot better, make feature development a lot better. And we've actually started to move that up the stack a little bit in terms of let's do that as our machine learning researcher, right? Let's do that for different kinds of experiments we want to run in terms of predictions or other more sophisticated front end stuff that the clients might actually use, but do in a way where we have this amazing PhD level research tool that can run for hours and solve complex problems more. So there's a lot of really interesting ways to use these tools research wise, day-to-day wise, right? And for brainstorming.
Fascinating, isn't it? Now, circling back on machine learning, you mentioned anomaly detection. Is that around fraud, potential fat finger entry? What do you use machine learning alert models for in your processes?
Yeah, it's a good question. So we have one luxury of being in an institutional space. Most of what we deal with is already fairly sanitized data, particularly from a kind of a fraud or what you might find in a more retail client base in terms of personal information or shady transactions and things like that. So we get to avoid and sidestep some of those things. But still what comes through are really what you're talking about. There's fat finger data problems, or there's some part of the process upstream from us or downstream from us that requires some human intervention, right? It's manual at some level, or semi-manual at some level, and as a result, that data can be corrupted, or just corrupted by normal kind of operational workflow things, right? It's late, the system goes down. How do you manage around those and apply the data integrity? And so we know we used to run these kind of very standard things, like percentage change movement, historical standard deviation comparisons, things like that. But it never really captured the anomalies we actually saw, right? That were harder to identify. And not least of which is, of course, you scale up to hundreds of thousands of data points every day. Humans go look at that, right? And if any place that is looking at that with human eyes, right? They eyes get tired, right? They're not going to catch those things. And so we look at it for all those things in terms of maybe it's not actually an error, but maybe it's just a weird circumstance that needs to double check a big inflow much bigger than in the past. It was not something we expected. So we use it for all of those kind of things. And we're also starting to use it for, so that covers all the inbound data, but all that post-trade data too, right? That's really important. Did the trade get booked in a way that was done manually at the counterparty, and then it comes back through, or something was misunderstood on the phone? All these little steps. So basically, anytime, best practice, right? Front office, back office. Anytime there's a communication change, it's best to reconcile, right? And if you think about all these little data points that we would process, getting all this data, generating a bunch of data, executing trades, post-trade reporting, day in and day out for thousands of accounts, there's exponential numbers of combinations of all those little handovers, right? And so we employ machine learning through all of those aspects from an anomaly detection standpoint. The other thing we do is we started to use it for prediction stuff too. And one of the things that, again, working in this some more antiquated parts of finance, things like a fund calendar, for example. When should you expect data for a fund? Is it just in the holidays in that country the fund is, or is it also where the fund administrator is, or maybe where the investor is, or maybe where the fund manager is too? It's unclear, right? And it might be tucked away in some prospectus somewhere, but who has that and who wants to parse that PDF? And so we've done models for those kind of operational aspects too, in terms of data delivery, expectations, and what should we expect? How should we react to that? And those are kind of these nice little operational alpha things, right? You get a lot more clarity in what's going on. You can focus your efforts as a small team in places that need it, and do it with more confidence, right? So this allows our clients who use our software to add more scale. You can launch more accounts. You can run more accounts safely. You can do that with more certainty than you could, in a more traditional review framework.
And speaking of your clients, two-parter here. First of all, what or who are your type of clients that you predominantly deal with your software? And then two, what AI capabilities are they having access to?
So most of our clients, certainly in terms of bulk of the business, are what we call our distribution channel partners. So these are other institutional currency managers, largely custody banks or other large currency managers that wanted to upgrade or improve or augment their existing software and their existing processes to add new capabilities or scale or whatever it may be. So their team will run it and service their institutional clients. And so that looks like the end client then is an asset manager, big or small, right? Anywhere in the globe that is running maybe a private markets fund or running an ETF, or then also an asset owner who at the end of the day is looking to manage a larger basket of currencies and as a result actually manage a lot more data too. And so that gives you certain layers of stakeholders, right? So on the one hand, you have the end client who is responsible for the financial structure that's actually benefiting from the currency management, and they want to see certain things about performance and analytics and KPIs around processing time and how all the vendors that interact here are doing. And then you have the currency management user at one of our channel partners who needs more oversight, right? They need to be able to use the system to manage their own workflows from their internal data to their trading systems, and also as a result review more KPIs around how the actual operations and management oversight is taking place. So with those kind of user bases, we've tried to structure the AI tools in a couple different ways to address them. And so on the one hand, the users who are managing accounts in our software, they're the ones who are going to get the anomaly detection to make sure that their workflows are cleaner and they can validate the inbound data more quickly and more cleanly. And that data takes place of also static data. So one of the things that's kind of interesting here that we're proud of that we launched last year is a settings reviewer. So as you can imagine, right, this is one of the tough parts in an overlay program, and actually makes machine learning not really handy here, is when you've seen one. And so there's so much customization and different configurations. It's very hard to do a big data comparison of what should this account be like this other account? Are there any differences that we should look out for? And also very difficult to review. Right? It was 30 minutes to an hour to review these kind of accounts. And things are changing all the time. So it becomes very hard to do this at scale on a regular basis. And so we thought LLMs would be a great way to do that, particularly the reasoning LLMs that can do these kind of inferences and better pattern recognition. And so our best estimate is that saves something like 55,000 hours of review time in terms of reviewing all the signature accounts, which just happens, continuously on any change. Now, between you and me, right, you can't really save 55,000 hours that you'd never spend. But that's kind of the point, right? It's a review that you would never do. It never increases your revenue or profit enough. It reduces risk, but to a real material degree, but it's too big of a job for you to do it any other way, right? And so people just accept the risk and move on. And this, I think, is something that probably exists across a lot of businesses. But the AI tool there allowed us to pursue that.
Well, I think that risk reduction, though, is very valuable, especially when you think about your client base. Many of them are regulated entities. And I guess that comes to my next question is, how do you think about governance, auditability, lineage, transparency because you need to be able to evidence those for regulators and your clients who ultimately are regulated as well.
Yeah, this is the key question of how do you put these AI tools into into institutional finance. And I should say too, one of the things that settings reviewer, for example, that's all behind the scenes. So we actually haven't surfaced a chatbot in the application because it's too free form for a lot of the workflows we're doing. And some of the models, is as immensely capable as they may be, right, are still non-deterministic, right? And so you can still get these odd outcomes, which are not, the one odd outcome out of 10,000 is still not an acceptable ratio in the world of institutional finance, right? Like you said, because of regulatory risk, operational risk, financial risk there. And so we are starting, I should say, we are putting a little bit of a chatbot in the analytics piece, which allows the users to, slice and dice some of the visuals and things like that, but not autonomous agents that you can just tell the chatbot to do a trade. But that's part of that reason is exactly what you were talking about in terms of regulatory oversight, transparency, not only from the from a compliance standpoint, but just from a user experience and understanding standpoint. And so we actually came up with a name. We had a consultant help us come up with the name Lumint because we think transparency is so important, right? So it's a combination of lumen as in light, right, and mint as in money. Not that creative, but it felt like it captured what our ethos was. And so we tried to do that throughout, right? So one of the things that was a founding principle of ours was you can tell the client you're going to run a currency management program. You can then run that currency management program. But a lot of currency managers didn't have very transparent reporting on how that program was doing. And we thought that was the most critical piece to have that third pillar. And so we've had transparent analytics and a client portal where they can see every action that was taken on their accounts since the beginning, because that's how crucial it is from a trust perspective, but also from an understanding perspective. These are complicated things, and they have dynamic impacts on dynamic and potentially large impacts on a portfolio, right? And so it's very important to understand what that can be. So we've led with that from that first day, and AI has made that in some ways more challenging, but in some ways easier. So I'll give you two examples. So one is that in our machine learning anomaly detection, some of our early feedback was, okay, I kind of get why this number it was flagged, but why, right? And we started looking at, well, you can add explainability to a machine learning model pretty easily these days, but it's not that easy to just put that in English, right? If you just throw out 5 different factors and some numbers to somebody, that doesn't really tell them very much. And so, we were able to use AI tools to say, give us a short summary, in normal language for the user can understand why we did it. So we've, been able to use those tools to improve that in some ways, which we're excited about. And then on the other side, we always, I think, for the foreseeable future, at least in our space, there's always going to be a human in the loop for that final step, right? If you're going to go send the trade for execution, you want a human to put their stamp of approval on it. And so what that's meant for us is, let's make the use of the AI tools to be able to surface a lot more information and a lot smarter information to the user and do that more quickly, so that it's much easier for that person to make a much more declarative decision around, yes, this is good to trade, in a way before maybe they're looking at 2 different screens or they're trying to rely on their intuition. And we think that gives the user all the transparency they need, but also gives them the power to really scale up their business in a way that wasn't possible before without the AI tools and the level of automation we tried to employ.
So we've gone through a few examples of where AI is present in the currency management treasury workflows. Are there any other examples that you could share?
Yeah, so I could say a little bit about where we're going, right? So we've about a year and a half ago, when we started to look at what AI tools were available and what they were capable of, was going to lay down this roadmap. And this goes back to a little bit of what I was talking about in terms of doing experiments to figure out which works best, which tool works best for your use case, but also rethinking and re-architecting how we run the business in a way that we can then make the most of these tools. And so the last couple of years, we really spent a lot of time on that foundational layer, right? Is the data clean? Is the account settings clean? Is the workflow clean? All these things that are done on that bottom layer of raw data that we process. And now that level of confidence in the underlying data, right? Then we can surface that to go to the next level, which is autonomous trading and management and analytics and reporting. And so where we want to go, and I think one of the really cool capabilities here in terms of having a really strong data foundation with, built and architected with, AI optimization in mind, is that you can move up the stack to do these kind of things, not only from just a business scale perspective, but the ultimate goal here for us, of course, is to make the client outcome better, right? And so if we can start to, you have this framework where you have the data, you have a workflow that is visible and can be managed by an agent in a clean and transparent way, well, then you also have a workflow that can be optimized by that agent, right? And so we can set then metrics and benchmarks and say, okay, well, maybe your hedge ratio tolerance or the contract tenor that you're using for your hedge has always been 3 months, for example. Well, maybe if it was 6 weeks, right, and that worked through your operational workflow, you could have had a much lower impact from interest rate differential. To get into the weeds a little bit, right? And that might have been a better outcome for your hedging program for the last 12 months. Being able to, we can do that now on a one-off basis, right? Which is useful, but it's resource intensive and you can miss stuff, right? And or it's not continuous improvement. So that kind of workflow of running overlays and running financial programs with that full loop of continuous improvement, I think, is where the AI tools can take us with what their capabilities are.
Effectively coming up with recommendations based on the data, right? It sees trends or improvements and is proactive rather than reactive.
That's right. And what we find, I think one of the things is what I find a little bit interesting about the currency overlay space is, again, the client, it's not the top priority for the clients. And so there are some clients who are very sophisticated in terms of their understanding of how currency overlays can impact their portfolio and their performance. And they know your questions asked, this looks a little bit different. I think we can maybe improve here, and then you can do it. But there's a large swath of the industry that it's a set it and forget it type of situation. And how great, right, if that set it and forget it approach could also, lead to outcome improvements.
So as you are automating the currency and treasury world, and you also spoke about, being able to service small to big, does that open up new segments for you to target then?
Yeah, and we're really excited about this. We are creating a version of our software that's tailored for corporate treasurers, particularly at small and medium-sized businesses. And the goal there is kind of the same as when we started Lumint. There's a size company that deals with significant currency risk and often referred to in annual reports, right? Currency headwinds, right? These kind of things that there are no off-the-shelf tools for that are economical for them to use. And a lot of that has to do with a lot of things we've spent a lot of time investing in, right? Data integration from an ERP system and other things that are hard to integrate with and hard to automate. So we spent a lot of time investing in that. So that we're excited about to launch that product this year. It's called Cora. And it's interesting, I think, because it moves from an institutional style user base to one that's more retail in terms of their needs and expectations, right? And I think there's also, it's a lot less structured of a program than institutional currency management. It's like, if I have an currency exposure next year from a supplier at a small corporation, I have a lot of leeway as a treasurer of when I'm going to make that currency decision, right? I trade today, next month. Does euro look cheap enough now for me to do it? There's all these factors that can come into play with really important outcomes. And so I wanted to mention that because I think, one of the great tools or one of the great capabilities of a lot of the AI tools now is that kind of decision support. And so I certainly anticipate when we move away from these very rigid or we go beyond some of these really rigid institutional currency management workflows to a corporate workflow, I think our AI tools will even be more prominent, more user facing than they are now to do just that and help clients and treasurers do that in a lot more ad hoc way.
Well, Alex, if you had one message for our audience to take away from today's episode, what would that be?
Experiment with AI and don't stop. I think it's one of those things where the capabilities are changing so quickly. There's not an instruction manual, right? And there's certainly not an instruction manual for AI for your business or your parts of your business. And so the only way to be able to make those informed decisions about what tool to use and when and how is to just start trying stuff.
Great message. To wrap up, could you share with us your website where people can learn more about your tools and software, and then any LinkedIn for your company and for yourself?
Sure. Yeah. So Lumint.com is our website. And then you can find us on LinkedIn as well, Lumint Corporation. We share most of our updates around product development and research and other thoughts there.
Well, Alex, I really enjoyed getting into the world of currency management and FX. So thank you very much for coming on the pod.
Great to be here. Thanks.